Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, January 16th, 2026, and here is everything you need to know as the markets close for today. The Indian equity market wrapped up Friday on a moderately positive note as benchmark indices gained ground in a day shaped by IT sector strength and broad investor caution. The Sensex climbed 187 points to settle at 83,570, a gain of 0.22%, while Nifty 50 rose 28.75 points to close at 25,694, a gain of 0.11%. BankNifty remained largely flat, hovering around the 59,580 level, reflecting consolidation near its near-term support zone. The market sentiment, however, remained guarded as foreign institutional investors continued their selling spree, offloading a net worth of 4,781 crore rupees. This marked the seventh consecutive session of FII selling, and it was only the sustained buying from domestic investors worth 5,217 crore that prevented deeper declines. The rupee, meanwhile, weakened to around 90.65 against the US dollar, moving closer to historic weakness levels, adding pressure on FII flows and contributing to the cautious mood on Dalal Street. The broader market showed weakness with declines outnumbering advances by a significant margin, with 1,830 stocks falling against 1,339 advancing, a clear indication that market breadth remained unfavorable despite gains in the headline indices. The standout story of Friday was the IT sector's impressive 3.44% rally, driven entirely by upgraded guidance from Infosys after the company reported its Q3 results. Infosys raised its full-year FY26 constant currency revenue growth forecast to 3 to 3.5%, up from the earlier 2 to 3% guidance, signaling improved demand visibility despite margin pressures in the quarter. The confidence from India's second-largest IT bellwether sparked broad-based buying across the entire technology pack. Infosys itself surged 5.61% to 1,671 rupees, while TechM jumped 4.98% and Wipro climbed 2.54%, adding to the sector momentum. OFSS led the Nifty 200 gainers with a near 6% jump to 7,959 rupees, followed by strong gains in L&T Infotech, up 4.6% to 6,308. These gains were significant given the pressure the IT sector has faced from global macro headwinds, and the renewed optimism suggests investors believe the sector may be bottoming out. On the flip side, the Cipla story turned sour as brokerages downgraded the pharmaceutical stock, following the announcement that production of its key US product Lanreotide has been temporarily paused for FDA remediation at its European manufacturing partner Pharmathen. Lanreotide is Cipla's third-largest product globally and generates around $150 million in annual revenue with a 22% market share. Morgan Stanley and Nuvama both slashed target prices on Cipla, with Nuvama downgrading it to reduce. The stock ended down 2.53% at 1,397 rupees on the Nifty. Beyond Cipla, Pharma as a whole faced headwinds with the Nifty Pharma index declining 1.28%. In the broader loser list from the Nifty 200, Patanjali shed 4.04%, Dixon fell 3.34%, and Mankind dropped 3.07%. Banking stocks, however, shined as the sector consolidated strength from robust earnings results. Federal Bank soared 9.68%, and AU Small Finance Bank gained 4.71%, helping the Nifty Private Bank Index advance 0.45%, despite the selling pressure in the larger market. Most of the mid-cap and small-cap names showed weakness as the Nifty Mid-Cap 50 fell 0.5%, and the Nifty Small-Cap 50 dropped further, with broader indices failing to keep pace with the headline movement. On the technical front, Nifty 50 completed a rather indecisive week, testing the 25,850 mark during the day, before pairing gains and settling at 25,694. The index has remained trapped in a 25,600 to 26,000 zone throughout the week, forming doji-like patterns, suggesting genuine indecision among market participants. Support remains intact at 25,600, with a secondary support zone at 25,500. Critical resistance lies at 25,800, and a clear breakout above 26,000 would signal renewed upside momentum. BankNifty similarly held around its consolidation zone near 59,580, with resistance building at the 60,000 level. The index failed yet again to sustain above the psychological 60,000 mark, indicating selling pressure at higher levels. Support for BankNifty sits at 59,300 and 59,000 levels, and a break below 59,000 would open the door for a move toward 58,700. Both indices remain range-bound, and a cleaner breakout is needed to establish the next directional trend. The Nifty IT index was the star performer among all sectors, rallying 3.34% as investors positioned for a turnaround in the sector. Banking stocks also outperformed, with the Nifty PSU Bank index gaining 1.16% and the Nifty Private Bank index advancing 0.45%, reflecting the strength in Q3 results from banks. Oil and gas stocks added 0.28%, supported by lower crude prices. On the weakness side, Pharma emerged as the clearest loser with a 1.28% decline, followed by consumer durables, which fell 1.11% as investors moved away from discretionary categories. Metal stocks eased 0.53%, and auto stocks lost 0.45%, while media fell 0.35%, suggesting a rotation from cyclicals toward IT and financials. The Reserve Bank of India notified the new Integrated Ombudsman Scheme 2026 on January 15, setting to come into force from July 1, 2026. This replaces the existing Integrated Ombudsman Scheme of 2021 and will provide a unified grievance redress mechanism for customers of RBI-regulated entities, including banks, NBFCs, and cooperative banks. While not immediately impactful on markets, the move underscores RBI's commitment to consumer protection and strengthening financial system trust. On the SEBI front, the market continues to monitor the futures and options framework, particularly given discussions around F&O expiry schedules and retail participation safeguards. No major guideline changes were announced today, but market participants remain vigilant on any proposed changes that could impact derivatives trading and retail leverage. In the commodities space, gold saw profit-taking after a record-breaking rally earlier in the week. MCX gold for February contracts fell 0.36%. shedding 520 rupees to close at 1,42,601 rupees per 10 grams, easing from the record high of 1,43,590 rupees hit on Wednesday. Silver declined more sharply, falling 1.39% with the March contracts dropping 4,027 rupees to close at 2,87,550 rupees per kilogram, also retreating from the lifetime high of $93.56 per ounce touched on the COMEX. The correction in precious metals reflected easing geopolitical tensions following President Trump's softened stance on Iran, which removed some safe haven buying interest. Additionally, a firmer US dollar index pushed higher on expectations that Federal Reserve rate cuts have been put on hold for the first half of the year, weighing on dollar-denominated commodities. Crude oil prices also fell sharply as Middle East tensions eased, and the US signaled it would hold off on military action against Iran. Brent crude dropped 3.94% to close near $63.89 per barrel, while WTI slumped 4.56% to $59.19 per barrel. For the Indian rupee, the weakness to 90.65 against the dollar reflects broader EM pressure amid elevated global crude prices and persistent FII outflows affecting the currency. The broader geopolitical backdrop turned less acrimonious on Friday as initial market fears around possible U.S. military escalation in the Middle East subsided following Trump administration reassurances. The easing of tensions, particularly around Iran, contributed to profit-taking in gold and silver, and provided some relief to oil prices, which had spiked earlier in the week. While tensions remain simmering in the Middle East and around geopolitical flashpoints, investors' risk sentiment has stabilized somewhat, reflected in the consolidation seen in both equity and commodity markets. The focus is now shifting back to corporate earnings and the India-US trade deal negotiations, which continue to cloud sentiment given the uncertainty around potential tariffs and trade barriers. Looking ahead to tomorrow, Nifty 50 faces an important technical junction as it remains trapped in the 25,600 to 26,000 range. A decisive move above 26,000 would signal renewed buying and could open the door for a retest of recent highs, while a breakdown below 25,600 would accelerate selling toward 25,500. The momentum appears mildly bullish given the IT sector strength and support from banking stocks, but the elevated India VIX at 11.37 levels suggests traders remain cautious of sharp moves. BankNifty has similar characteristics, consolidating near 60,000 as bulls and bears jockey for control. The key catalyst for Monday will be the opening cue from global markets, particularly US markets, which have shown resilience despite the headlines. Additionally, Market participants will closely watch for any further developments on the India-US trade deal, which remains a major sentiment driver. The Q3 earnings season continues with more results due, and strong guidance like Infosys could continue to support selective buying, particularly in beaten-down sectors like IT. Meanwhile, if there are no further negative surprises like the Cipla drug disruption, Pharma could attempt a technical recovery. The overall market setup favors range trading and stock picking rather than aggressive directional bets, given the consolidation patterns and mixed breadth. Here's your actionable takeaway for traders heading into the weekend. The IT sector has proven once again that strong fundamentals and better forward guidance can overcome short-term macro headwinds. If you own IT stocks, Friday's rally suggests sector momentum may have bottomed out, making IT a relative strength play in a consolidating market. Conversely, the Cipla-led weakness in pharma demonstrates the importance of supply chain risks and regulatory compliance in the sector, so caution is warranted on large-cap pharma unless a clear recovery signal emerges. For those looking at index plays, the Nifty remains logged in 25,600 to 26,000, making this range ideal for short-term option sellers and swing traders collecting premium. Keep your stop losses tight, watch for a break of 26,000 as a bullish signal, and monitor any dips below 25,600 as a risk-off indicator for the broader market. Also, given FIIs selling pressure, dips supported by DII buying on indexes are worth watching as the domestic bid provides a floor. Stay tuned for next week's morning's wrap and send in your questions on stocks you want us to cover. This is Prem signing off. We'll be back on Monday with the latest market moves and opportunities. Thank you for tuning in to What Moved the Market.